Welcome to Bullets, Pickler Wealth Advisor's monthly market update, where each month I break down the major economic and political activities happening in our world. No frills, no jargon, just the facts. Did you know? On June 14, 1777, the Second Continental Congress passed a resolution stating that the flag of the United States be 13 stripes, alternate red and white, and that the Union be 13 stars, white in a blue field, representing a new constellation. Over 100 years later, in 1916, President Woodrow Wilson officially established June 14th as Flag Day to commemorate this historic decree. Each month we look back at the prior month to talk about what happened in our world. In the month of May, the market recovered from the April pullback, but it lost steam after all three indexes hit record levels. It was pretty incredible when we saw the S&P 500 over 5,000, the Dow Jones Industrial Average over 40,000, and of course the NASDAQ over 18,000. These were pretty incredible. And once again, what it reinforces is that, when you have those pullbacks are an expected part of market activity. In fact, it's expected that you could have multiple 5% pullbacks, maybe even an occasional 10% pullback, and yet for the market still to have positive rates of return. And that's exactly what we saw as coming out of April, where the market had a great recovery, hit those market levels, and then we began to hit a little bit of a summer doldrum as some economic activity came out that caused a little bit of market distress, and we saw the markets trade pretty well sideways for most of the month of May. The second thing that we saw happen in the month of May was that we had the PCE, the Personal Consumption Expenditures Inflation Report, came out on the very last day of May. Now, the numbers came out as expected, and inflation is continuing to show very, very slow signs of dropping. We're continuing to see inflation continue to be a pervasive impact, but we are following a marketplace where the inflationary numbers are coming back down. In fact, the PCE number came in around 2.7%. And if we look at the core PPI number, it came in around 2.4%. Inflation in many cases can be a little bit of a backward-looking number because we still have some doggedly high numbers in rents, in real estate prices, that we believe is making these inflation numbers actually be a little higher than where they really are in terms of seeing where we are in the marketplace. Now, the third thing that we saw in the month of May was a continuation of incredible movement and momentum regarding artificial intelligence. We saw the earnings numbers come out for NVIDIA, and those numbers once again were breaking all kinds of records as NVIDIA has continued to show market leadership. We didn't see quite the follow-through in the month of May with the overall market continuing to grow at the same rate NVIDIA has, as we've seen in previous quarters. But what we're experiencing here is, in my opinion, the fourth industrial revolution. If you take a look over history, the first industrial revolution was the invention of the steam engine in the 1830s by Robert Fulton. The second industrial revolution was really the invention of automation, of the assembly line process. Henry Ford in the 1880s would be a good example. And then, of course, in the 1960s, we really had the introduction of the computer age with the development of the microchip in the 1960s and how that's changed. If you look back over the history of these industrial revolutions, we had clear winners and losers, and I believe that we're going to be experiencing that now with this fourth industrial revolution, which is truly the fusing together of the digital and the physical as we move into this new world of artificial intelligence. And I believe that this industrial revolution has the ability to surpass all previous revolutions, both in terms of the impact on our society, the impact on our economy, and certainly the impact on our markets. And we'll continue to see the impact of AI as it impacts real estate values, it impacts utilities, all areas of our economy. The world will be changing dramatically. We don't even know yet how extensively AI, and the technological advances will continue to change our economy, change our world, and certainly change our markets. With May behind us, now we look forward to the month of June. And June is clearly going to be a time that we're in that period after earnings season. When some people talk about the summer doldrums, where will the market be going? What will be driving market behavior? And I believe, once again, there'll be three things that we'll be looking at. The first one is the Federal Reserve continuous rules. The Fed rules and continues to still lead this market. But everyone's concerned about when or if the Federal Reserve will begin cutting interest rates. We certainly will be watching the European community as they begin to set the leadership of actually being one of the first global economies to actually begin cutting interest rates. That should be happening in the first week of June. We're still looking for a Fed which will be meeting in June and July, as the possibility of cutting rates is looking very, very unlikely the Fed will cut rates in the month of June. It is possible, based upon the economic data coming out, the inflation numbers coming out, that the Federal Reserve could cut in the month of July. But the markets are thinking it's more likely than not the Fed may not cut interest rates until September. But there's a growing sense that if the economic numbers are not where we need to be, or if there's concerns about having an impact on the election, that the Federal Reserve might not cut interest rates at all. This will be something that will clearly be drawing and driving market activity and market sentiment. The second thing we'll be watching is going to be life after earnings season. If we don't have clear earnings data, we don't have clear economic data, what's going to be driving the economy? Will the consumer, which has been so steadfast, so resilient for the past couple of years, continue to lead the market activity? Will they continue to be as resilient in spending money and keeping our economy growing? We're certainly seeing evidence that our rate of economic growth is slowing. We're certainly also seeing evidence that the rate of consumer spending is also slowing, and that the rate of credit card delinquencies may also be growing. All of these are factors that could lead to a bit of a slowdown and certainly a market reaction. On the other hand, if the markets see the economy slowing, then it could be seen as being bad news, being good news. Because if the economy is slowing, it may be more of a motivation for the Federal Reserve to actually cut interest rates a little bit earlier. So we still live in this fairly weird world where sometimes good news is bad and sometimes bad news is good. The third factor that we're going to be watching is going to be the impact of politics and geopolitics on the market. As I'm recording this, we've just heard news coming out of India that President Modi, who is expected to win a large victory in India, is actually now going to be having to form a coalition government. This is causing stock prices in India to drop. And certainly there's fear from a global perspective that Modi, who is seen as a pro-capitalist type of leader in India, which is clearly one of the fastest growing economies, and certainly the fastest growing democratically elected economy on the planet, it could have a widespread impact. It's one of the reasons why we've been a little bit reluctant to put a lot of money into emerging markets or into international markets. It's because of the uncertainty of this election. And it's certainly something we'll be watching as we consider the impact of the upcoming U.S. election and the uncertainty there. The reality is that geopolitics, whether it be the invasion of Russia into Ukraine, whether it could be about the drone strikes by Iran, whether it could be about an event such as 9/11, all of these geopolitical events can have an impact. Certainly, in many cases, the impact is not very long-lived, but it can have an impact on the markets in the short term, and we'll be keeping a very, very close watchful eye. And certainly as we get closer and closer to the U.S. election in November, then we'll be watching very closely as to the impact that the possibility of volatility, the possibility of uncertainty could have on our markets. Each month we're very proud to bring a favorite quote. And for the past couple of months we've been focusing on presidents and outstanding leaders. Well, this month as we think about Flag Day, I want to think back to a quote that came from President Woodrow Wilson when he said, This flag, which we honor and under which we serve, is the emblem of our unity, our power, our thought, and our purpose as a nation. Thanks again for joining us for another edition of Bullets. We're so proud to bring you this market update each and every month. And remember, Pickler Wealth Advisors is our family delivering solutions for your family. It's our purpose. Together we plan. Until next time, I'm David Pickler, and these are our market bullets.